the key to successful diversification for asset allocators is adding new assets with very low correlation to all of the other assets in the ecosystem. If you do the correlation between Bitcoin and gold, their returns, since 2019, the correlation has been 0.14. One is perfect correlation, and here we are at 0.14, very low, almost no correlation. It's closing in on the low point that many technical analysts are suggesting as the place where it should stop. These are very volatile moments at or near the bottom, but we usually do look back and say, wow, I wish I had caught that low. This V-shaped recovery has been quite significant. It does seem like the stars are aligning.
For years, Bitcoin has been framed as digital gold, a scarce, decentralized, rules-based asset meant to mirror gold's role in the financial system. Yet recent price action has challenged that narrative. Gold has surged to new highs, while Bitcoin has fallen nearly 50% from its peak, reigniting skepticism across markets. Cathie Wood's key clarification is statistical rather than rhetorical. Bitcoin and gold were never meant to move together. Since 2019, their correlation has been just 0.14, effectively no correlation at all, underscoring that Bitcoin should be understood not as a gold proxy, but as a fundamentally different asset evolving on its own trajectory. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
Look at what the gold price has done in the last few years, and look at what's happened to Bitcoin. Now, this is a log chart, so you can see gold has had a massive move to the upside. This chart ends at the end of 25, and of course, I think last night we got down to roughly $60,000 in Bitcoin. So really cut in half since its peak in October. What is going on here? Isn't Bitcoin supposed to be digital gold? If it's digital gold, why isn't it behaving like gold? And a couple of points to make here. If you do the correlation between Bitcoin and gold, their returns, since 2019, and I put this in my New Year's letter. You can see the matrix there if you'd like. The correlation has been 0.14. One is perfect correlation, and here we are at 0.14, very low, almost no correlation. So that is very important to understand. What you can also see here, though, is gold tends to precede a big move in Bitcoin. You can see the circles there, and we'd have a gigantic circle around what has happened recently. And so maybe that will happen again. We actually think it will. I cannot tell you how many bear stories I've heard about Bitcoin in the last few weeks, last few months. And just go on to X and you'll find all kinds of reasons why you must sell Bitcoin. And these are the periods that are kind of interesting. We post our trading at the end of every day, and you'll see that we had been nibbling at our crypto exposed stocks. We didn't know how far this was going to go, and maybe it's not over, not promising that, but there was so much negative sentiment that I felt, okay, we need to leg in and lean into this. If our research is correct, that this Bitcoin is 3 revolutions in one. It's a global digital, private, very important, rules-based, even more important, monetary system. And that's a very big idea. The second revolution is, it is a technology. It's a new technology. It's really adding another layer, I would say, to the internet, so that we have native currencies native to the internet that will be able to handle agentic commerce and other such agentic movements taking place out there. That's a very big idea. And then, and it won't be, of course, just Bitcoin. It'll be Ether, importantly Ether, Solana, maybe Hyperliquid. We shall see. But what's interesting about this period is the big three have been identified. And those are Bitcoin, Ether, and Solana. You know, the worry historically has been, how many of these things are there going to be? Is this going to be a very fragmented situation? And we're learning who the big winners are going to be, who the big winners are. And I think that's a very important. And then the third revolution is, this is a new asset class. Bitcoin is leading the way. It is the most secure of all the cryptocurrencies out there, backed by the largest computer network in the world. And so really an anchor to an asset allocator looking to move into this new world. And why would an asset allocator do that? Well, if we're right, and well, it's a fact that at least over the last 5 years, the correlations have been, the correlation has been as low as 0.14. The key to successful diversification for asset allocators is adding new assets with very low correlation to all of the other assets in the ecosystem. And this one qualifies. Why do they want that? It is because with that low correlation, introducing it, risk-adjusted returns go up over time. And so I do think institutions are serious about this new asset class. They may have been reticent to move in because they were hearing about the 4-year cycle, and lo and behold, and I'll hats off to Chris Berniski, who has been very right in calling for, whether it's the 4-year cycle or whatever, just this downdraft. And so it's closing in on the low point that many technical analysts are suggesting as the place where it should stop. These are very volatile moments at or near the bottom, but we usually do look back and say, wow, I wish I had caught that low. This V-shaped recovery has been quite significant. Not promising. I want to make sure that there are no promises here, but it does seem like the stars are aligning.
Bitcoin remains volatile, particularly near market bottoms. Cathie acknowledges this openly. These periods are often chaotic, marked by sharp price swings and emotional decision-making. Yet they are also the moments investors later look back on with regret for not acting. While she avoids making predictions about exact timing, she notes that technical indicators and historical patterns suggest Bitcoin may be approaching a cyclical low. If history rhymes, recoveries from these levels tend to be swift and decisive. The current environment, while uncomfortable, may represent transition rather than decline.
So what has been the biggest bugaboo as it relates to Bitcoin, or the worry that we've heard about more than anything else in the last few weeks? Because it's all about quantum computing. The last few weeks have been, lots of stories about quantum computing, and I would say the large shift in Bitcoin, the OGs selling, or just shifting wallets to more quantum-resistant wallets. So I think that's really caused a lot of concern. And here's Michael Saylor's answer, he was very reasonable last night in his discussion around quantum. He doesn't think it's going to be an issue for 10 years or more, but he said, here's what we're doing in terms of our commitment to Bitcoin security. And so you can see some of those moves now. But I also wanted to show our research. Again, this is out of Big Ideas. And this is when the quantum controversy had quieted down last year as it relates to Bitcoin. So Brett Winton, as chief futurist, has a big focus on quantum because we can't miss the next big thing. It's all we do is disruptive innovation. And here I thought was a compelling analysis based on what has happened with quantum computing so far. And Google really leading the charge, that little black line on that chart. So you can see that it has been able to double the number of qubits over 4 years, which is slower than Moore's law in the semiconductor space. And of course, there is an error rate consideration, lowering that as well over 4 years. So if Google does not pick up speed, the red line tells you how long it will take Google to and quantum computing to really threaten Bitcoin, the Bitcoin blockchain as we know it now. So we go into the 2060s there. Now, if you make the assumption that Google is going to pick up the pace, and that's an interesting assumption because typically we learn a lot in the early years of a new technology. How quickly are the units increasing and driving costs down? That's the learning curve associated with new technologies. But let's assume it does pick up the pace, doubles the pace to Moore's law. Okay, then we have a problem in the mid-40s. So I don't want to make light of it. I do think it has caused movement among Bitcoin between wallets, between and among wallets. Are they leaving the crypto ecosystem? Some say yes. Maybe they're diversifying into other crypto assets as the DeFi ecosystem evolves here. I don't know how likely that is because these are Bitcoin OGs. They've been there forever. So we'll see. Maybe they're diversifying because they were hodlers and now they're 10, 15 years older and they have families and, their risk profiles have gone down. They should diversify. Any financial advisor would say so. We'll find out, but I thought Brett added some good perspective here.
Cathie Wood's perspective is not rooted in price targets or short-term forecasts. It is grounded in structural change. Bitcoin's divergence from gold is not evidence of failure, but evidence that it is something fundamentally different. It is a monetary experiment, a technological platform, and a new asset class unfolding simultaneously.